Do you want the perfect crypto portfolio for 2025? I mean, seriously, the best balance of steady large cap coins, more risky low cap gems, and highly speculative coins with moonshot potential. I'm Brett at CryptoGX, and in this video, we'll keep things super simple. First, why Bitcoin and Ethereum still run the show. Next, layer 2 speedways that make Ethereum cheaper. Then new decentralized finance applications turning staked Ethereum into extra cash. Also, the hottest AI and gaming tokens riding tech waves. The bridges that let every chain talk to each other, and even wildcard meme coins from social media and just virality. By the end, you'll see a balanced plan, a portion of safe giants, a portion of high upside ideas, and all of this together will allow you to grow with the market, but also let you sleep at night and not be too worried. So let's start off with our safe assets. Let's lock in the 2 coins that keep the entire stack standing. Bitcoin got a huge boost recently when the SEC finally said yes to spot Bitcoin ETFs in January of 2024. Not that recent, but it still plays a huge part in this current bull run. In the very first afternoon of this being live, those new funds traded $4.6 billion worth in shares. And over the year, they pulled in roughly $36 billion of fresh money. That wall of cash is why many pros now call Bitcoin a rock solid safety net. Ethereum is next, of course, as many of us know. Big firms like BlackRock and Fidelity snapped up more than $500 million of Ethereum when their brand new spot Ethereum ETF went live. This basically proved that deep pockets believe in Ethereum's upside as well. About a quarter of all Ethereum is now locked in staking. This is basically when you're earning yield and shrinking the supply that is currently hitting exchanges. This is really good news when demand jumps up. Together, Bitcoin and Ethereum make up about half of your portfolio. So they're very steady, they're battle tested and ready to kind of power the rest of your picks that are a lot more risky. And this is generally how you want to go about building a portfolio of investments in general. Diversify and pick lots of steady gaining assets rather than just entirely risk focused, because then there's a lot of room for volatility and aka losses. Now let's talk about some very promising Ethereum Layer 2 projects. To understand what a Layer 2 is, imagine the Ethereum blockchain as one crowded highway where every car is a payment or a transaction. To beat traffic, builders open up speedy side roads called Layer 2s. These are essentially their own transaction network that's separate from Ethereum's traffic, but it's built on the same blockchain. Ever since late 2023, money locked into these Layer 2s jumped from about $17 billion to $46 billion by May of 2022. This locked money is called TVL, or total value locked. As you can see here from this chart, the higher a TVL is generally reflected to be a greater user trust and adoption of that particular chain. So which Layer 2 projects can we consider putting into our portfolio? First is Arbitrum. The ticker for this is ARB. It holds about $19 billion in TVL, which is nearly 42% of all Layer 2 TVL. So it's the most popular lane on this map. There's loads of games and applications live on here, which keeps the traffic flowing. Next is Optimism, and the ticker for this is OP. This and its cousin Base, which was built by Coinbase, are kind of in conjunction with each other. Base alone guards over $15 billion of TVL, and it keeps transaction fees at under a penny. Optimism has something called a super chain, which basically lets big brands upgrade every connected lane that they have all at once. And this is super handy for keeping transactions moving very quickly and very cheaply. The third here is Polygon zkEVM, and the coin ticker for this is MATIC. This honestly magic Layer 2 tunnel launched in March of 2023 that uses something called zero knowledge proof. This essentially allows cars, aka transactions, to zoom very fast while staying private. And companies like Meta and Reddit already use Polygon technology. The last one we have is zkSync Era. The ticker for this is zkSync. After it launched something called Ignite prizes, money parked here shot past $400 million in TVL, and bridged funds topped $795 million. Smart investors in this kind of area of their portfolio will spread a little bit of an allowance across all 4 of these. Arbitrum based on its size, Optimism and Base for the Coinbase involvement, Polygon for their cool technology and really all the awesome stuff that they're building, and zkSync for very early bird rewards, things like airdrops and whatnot. When it comes to airdrops though, you gotta keep in tune with that and kind of be involved in the community. And the reason why is so that you can know when these rewards are actually coming. So as we discussed with the last section, speed is obviously very important, but let's make that speed earn you money. The first one up here is called Injective, and the ticker here is INJ. This is a Cosmos Layer 2 where you can swap, lend, and trade something called perps all in one location. Perps, you don't need to really really know what that means, it's called perpetual futures. They're different from futures because they don't have an expiring date, and it just means that you're betting on the asset in a different way than owning the asset on its own. So this being a very interesting place for people to make different types of trades, no wonder it ripped 400% in Q4 of 2023. Next up is Prisma Finance. On here you drop your staked Ethereum tokens and mint MKUSD. This is a stable coin that pays you extra rewards on top of your staking yield. This basically turns your Ethereum into double earnings because you're earning from staking it and you're earning on the rewards on top of it. Now, if you want to turbocharge your yield, Pendle lets you trade it like a baseball card. Its TVL exploded from $230 million to $4.4 billion in just 1 year. This is basically showing how hungry people are to lock in or boost their rewards. Now, they have a very interesting description of what this means and how it operates, called yield tokenization. And the main thing here is that the structure that they're using allows their users to choose how they interact with their yield. So they can be locking in fixed returns, speculating on future yield, or optimizing their portfolio. This is all very big tech babble, and it's not that important, but it's basically letting people do really interesting things with how they're earning yield. Finally, we'll look at a very tiny IntentDEX basket. This is a platform. There are others like it, but IntentX helps you match your trade wishes straight with pro market makers. This helps you skip old school pools for better prices. Now, I know that sounds like probably mumbo jumbo, but essentially it's another perpetuals trading market where you can do things based on what your intent is, more simply for what you really want to do with these advanced kind of trades. It's in early stages, it's risky and tiny in your portfolio, but if this kind of over-the-counter style trading takes off, the payout could be huge. Together, these 4 picks in this last section give our DeFi or decentralized finance slice a really big fuel to hopefully outrun the rest of our pack because they're more risky, they have more volatility, but they have more potential for return. While our DeFi coins stacked a bunch of yields, our robot coins are gearing up for the next race. AI tokens already add up to about $31 billion in value, over 3 times bigger than a year ago. SingularityNet's AGIX runs an open AI store, and it just teamed up with Fetch.ai to curb AI hallucinations, showing that these projects can work better together. Some reports are even putting AGIX's 2025 price roughly double what today's level is. As you can see right here, Singularity's AGIX is currently at 33 cents per coin. And if we look at some of these predictions, it's somewhere between 53 cents and 71 cents, which obviously is right around double what it's currently at. Now, on the other hand, Fetch AI's FET rides up on this same hype. Its leap last year was 171% on all of the ChatGPT buzz. And honestly, it really keeps landing on big exchange deals. Basically, this means that it's getting more adoption. Now, within this robot AI spectrum, Ocean Protocol is a data play. They're turning private info into a tradable good. In 2024, it had an upgrade called Compute to Data. Essentially, this means that it can learn from all of this data that's private without having it be publicly known, publicly shared. And in that sort of sense, it's a decentralized learning module. For all of these AI, robot, and very much more highly risky plays in a very small slice of our portfolio. They have really big ideas, but they're still early and they're ready to pop if the AI wave keeps flowing. While our AI coins are thinking about stuff, our gaming coins are bringing in lots of actual people and users. Blockchain gaming hit 7.4 million daily wallets in 2024. This is a 421% increase over 1 year. So with this increase in adoption, we want the infrastructure to also power that surge in adoption. Superverse's Super Token fuels a Web3 hub of partner studios and a custom low-fee chain built just for games. Immutable X, with a ticker IMX, is Ethereum's go-to gaming lane. It even teamed up with Polygon to launch the immutable zkEVM, so studios get zero gas NFT trades and full EVM support. The full EVM support is important because EVM means Ethereum Virtual Machine, which means it's a virtual computer that processes smart transactions on this blockchain. There's also one called Beam. This is spun out of Merit Circle. This basically brings a fat war chest holding about $94 million in its treasury to bankroll dozens of upcoming game titles and its own Avalanche-powered subnet. Basically, it's another platform for blockchain gaming, but it's backed by, a huge treasury and lots of money behind it. For this trio of Super, IMX, and Beam, I would give this like a 5% slice. It's got solid roads, deep pockets, and a really fast-paced way to the next big blockchain kind of hit, which is very important. important when it comes to adoption is usability and utility, and gaming very much has that. Games are obviously very cool and a very important part of the crypto ecosystem, but none of this works if your coins get stuck on one chain. Ethereum's Link is our big plug. Banks use Chainlink's CCIP with Swift, a transaction system, to shuttle tokenized assets across different blockchains. You don't need to dive too deep into this. If you want to dive into CCIP, then, be my guest. But another really big important piece of why this is going to be a big effect on the crypto market and be an important piece to have in your portfolio is that Coinbase's layer 2 platform just turned CCIP on for easy transfers. And that's the gist of what this CCIP does. Makes transfers easy. And the fact that we can now have these easier transfers on the Link blockchain gives Link that kind of leg up and importance in this portfolio mix. We'll see the main important piece of information here for Stargate on this cross-chain interoperability report from 2024. If we look at this highlights section here from this report, we can see that from May to October of 2024, Layer 0 bridges moved over $1 billion a month across 117 different blockchains. This is the kind of minutia that it takes to understand and see, and the announcements to look at when trying to find which coins are important, because the scalability and transaction volume and where all of these things are actually happening within the crypto world is very important, because where money goes, money flows. So with all of this movement, there's going to be a lot of focus there in the future. In Q4 of 2024, people sent $6.5 billion in value through them. Based on this volume, we're going to put a small slice of our portfolio into the Layer 0 token, which, as you can see right here, is ZRO. Last, in our cross-chain infrastructure section, we will look at Axelar's AXL. Big investors bought AXL at $1 in its 2022 Series B, yet it still trades below that today. As you can see right here on the current price chart, it's almost 39 cents per AXL. Now, obviously, it's down from its launch, so you're probably asking, Brett, why are you going to be putting part of your portfolio in that if it was at $1 and now it's at 38, 39 cents? Good question. The reason why this is an important token is that Axelar also powered JP Morgan's 2023 test that moved tokenized funds on the Avalanche blockchain. These are the kind of pipes or lanes where the cars go that let every other pick in our stack actually play together. This is Decentralized Social, or DeSo. Once these pipes or lanes are open, we need a social home. DeSo, or Decentralized Social, is a chain built only for posts, pictures, and follows. It holds about $98 million in treasury, where the whole coin sits near $110 million market cap. This essentially is almost cash at cost, being that the 98 and 110 are almost equal. Live applications like Diamond, as you can see right here, looks very similar to X, prove that it stores content cheap and fast. We'll slot a tiny percentage of our portfolio here for huge Web3 social potential upside if things go that direction. Personally, I see this as a much longer term play because of, as many of you may know, the huge focus that our society has on things like TikTok, Instagram, and X, and the user base is already there. The move to Instagram's Threads didn't really work out that well, so the move to this is probably going to take a much longer term, but in my opinion, it's an inevitability. So after parking a tiny little bit in the decentralized social, here's the big picture. Let's zoom out. Starting at the beginning, we're going to want half of our portfolio to sit in our safe bets, which are Bitcoin and Ethereum. Typically, I would have 60% of this be Bitcoin and 40% be Ethereum. So 30% of our entire portfolio is Bitcoin, 20% of our entire portfolio is Ethereum. These are the same coins that pulled in 4.6 billion of ETF volume in the first day that they were released. This is real Wall Street money that's backing our safe core coins. Next, around those core coins, we've added fast layer 2 projects that boosted their total value from 17 billion to 46 billion in 5 months. Now, depending on your risk level, you may want to have this section be anywhere between 30% to 45% of our portfolio. 45% would mean putting more in our less risky assets rather than the ones that we're going to talk about in a few seconds. The ones that I'll talk about after this are going to be much more risky. So right in the middle, let's say this is 25% of our portfolio, giving us 25% left. Next section, we have DeFi tools like Pendle, where locked funds rocketed to $4.4 billion. And then we have gaming projects that now host 7.4 million daily wallets, up 421% in a year. We also have bridge tokens that link every chain, and our decentralized social that's kind of more like a moonshot, risky bet. It could be the next TikTok or X. This mix right here is a little bit more difficult. I would put a heavier portion into DeFi tools and gaming for sure. We have 25% left, and I would personally try to split this between DeFi and gaming, and then the tiniest little bit into social. I would say 10 to 15% in DeFi, 10 to 15% in gaming, and then 1 to 5% in social media area, depending on how risky you want to get. This mix has 50% in very sturdy giants and then 50% in high risk growth sectors that gives us power to really grow, but then also peace of mind on our more stable side. I would say in general, this is a much more risky balance than a lot of portfolios, but this is because we are so deep into the crypto bull run already. You don't want to miss out on the higher value plays, but you still want to be somewhat safe. If you want to be a little bit more risk averse and staying away from the volatility, I would increase your Bitcoin and Ethereum holdings up to at least 75% of your total portfolio, just so then you've got that steady gains and you're not playing with things that could potentially not hit as high of percentage returns as the other players. Wherever you land on the risk spectrum, I hope you enjoyed this video. If you're interested in getting involved and starting your crypto portfolio, I'll leave links to Coinbase and crypto.com where you can get $50 of free crypto just for signing up with those links. And if you're interested in meme coins and want to get involved there, I'll leave a link to MoonShot where you can get some free meme coins just for signing up. Just once you sign up, click the claim meme coins button. I hope you learned something new and this video helped out. If it did, click the like button. And if you want to stay tuned for all things crypto, make sure to click subscribe. Thanks so much for watching. I'll see you in the next one.